This one strategy made this trader millions of dollars. Ross Cameron, the founder of Warrior Trading, turned a small account into millions, and he did it using simple yet powerful patterns like this one. But before you think, can I do that too? Let's talk about something that most traders miss. Every trader has their own style. Some people scalp, in and out of a trade in seconds. Some ride trends for minutes. And others? They hold positions for hours, days, even weeks. Here's the truth. The strategy you're using right now might not be the one meant for you. Maybe you're trying to scalp, but you're better at swing trading. Maybe you're forcing setups that don't match your mindset or lifestyle. That's why I'm starting this new series, Strategies Used by Pro Traders, to show you exactly how the top traders do it, so you can find what works for you. In each episode, I'll break down a strategy used by some of the world's best-known traders. So whether you're just starting or stuck in a rut, you'll get real insights from real traders who've been where you are. Episode 1, Ross Cameron's Bull Flag Strategy. Story of Ross Cameron. Ross Cameron didn't start as a trading genius. He was deep in debt. He had a 9-to-5 job, but he committed to one thing, mastering momentum trading. He didn't spread himself thin with 10 indicators or complex systems. He focused on patterns that repeat, and one of his favorite? The bull flag. So what exactly is a bull flag? It starts with a strong upward move. We call that the flagpole. Then the price consolidates, usually pulling back in a tight range. That's the flag. Ross looks for these patterns right after the market opens, in the first 15 to 30 minutes. The first thing to do in the bull flag strategy is to find stocks with high volume and high volatility that have made a big move in the last few minutes. Whether the move is due to news or any other reason, that's your signal to start watching. Next, you need to wait for a pullback. This happens on the 1-minute chart. There are two possible entry points here. The first entry is when a candle breaks the high of the previous candle. This is a bit riskier because the price might still drop for another leg down before moving back up. If you take this entry, your stop loss should be set at the low of the previous candle. The second entry is a breakout of the high after the pullback is confirmed. This entry confirms an uptrend, so it's safer, but your stop loss will be wider, placed at the same level as the first entry stop loss, which is the low of the pullback. Another important factor is volume. Look at the volume to confirm the trend. If volume increases as the price moves in the direction of the trend, it's a strong sign. You can also use indicators like the MACD for further confirmation. When the bars are green and both moving averages are pointing up, it's a high probability setup to break the highs. The exit point for this strategy should be at least a 1-to-2 risk-to-reward ratio. Since this is a scalping strategy, trades are held only for a few seconds to a few minutes. Ross typically holds his trades for very short durations, just enough to catch the quick move and lock in profit. You can apply the same concept to a bear flag. When the market is dropping sharply and then pulls back, creating a bear flag, everything works the same way, just in the opposite direction. But remember, no strategy works 100% of the time. Even the best strategies work only about 60 to 70% of the time, when all the criteria are met and you have an A+ setup. So don't expect to win every trade. That's just a fact. The sooner you accept that, the sooner you'll be able to stay profitable, even after some losses. This is the strategy used by traders who have made millions using it consistently. But here's where you come in. Just because it works for Ross doesn't mean it'll work for you. You need to ask yourself, do I thrive on speed and quick decisions? Can I handle watching the market every morning? Or do I prefer holding for hours, using technical and fundamental analysis? There's no right or wrong answer, only what fits you. That's why I'm showing you a variety of strategies, so you can try, test, and eventually master the one that feels right. This was episode 1 of Strategies Used by Pro Traders. We just scratched the surface of what's possible with the bull flag. In the next episode, we're diving into a completely different style, more relaxed, more analytical, perfect for those who hate scalping. So hit that subscribe button. Drop a comment. Have you ever used the bull flag pattern? Did it work for you? And I'll see you in episode 2.